Regulation is a major problem of fintech, especially cryptocurrencies. They are unregulated and have become fertile ground for scams and frauds. Due to the diversity of offerings in fintech, it is difficult to formulate a single and comprehensive policy. Regulatory uncertainty is making things complicated for both fintech service providers and consumers, leading to multiple points of ambiguity. Also, unethical practices in lending have also been reported, along with brutal collection methods, opaque lending practices, mis-selling of products, customer harassment, etc. Supervisory authorities are not present to encourage robust governance, including industry codes and self-regulatory organizations. One of the most thriving sectors at present in terms of both business growth and employment generation. Presentin different sectors and industries such as education, retail banking, fundraising and non-profit, and investment management. The valuations for Indian fintech players have been skyrocketing, primarily due to the immense market potential. However, there's been a rise in digital fraud and consumer dissatisfaction. Their importance is pronounced post-demonetization, with the COVID-19 pandemic further intensifying their significance. Fintech has brought down the cost of doing business drastically. The cost of a digital transaction like payments, credit assessment and fraud check is a fraction of the amount spent on physical processes. Breaking geographical barriers and shrinking the country into the palm of the hand. It is opening doors to a large number of underserved yet economically viable customers. In 2020, India overtook China as Asia's top fintech market. Indian fintech ecosystem is expected to reach $150 billion by 2025 from its present level of $50 billion. What about the regulation of fintechs? Worldwide, fintech firms are subject to 3: activity-based, entity-based and outcome-based regulation. India's initiatives for regulating fintechs. RBI's Fintech Regulatory Sandbox 2018. Another initiative by the RBI to bring a section of fintechs under their purview was the introduction of the Payment System Operator's License. Fintechs operating as peer-to-peer, P2P, are being slowly brought under the regulatory ambit. More recently, the RBI has notified that it has firmed up a regulatory framework to support orderly growth of credit delivery through digital lending. Comprehensive regulatory framework. A sensible regulation with transparency will strengthen the sector in the long run and facilitate the Indian economy in growing at its potential rate by allowing its growth drivers to fuel the engine of economic advancement. A more constructive approach from RBI would be to recognize the part fintechs play in India's financial inclusion agenda and establish a regulatory framework that will remove the current ambiguities. Bringing big techs in regulatory ambit in non-financial sectors such as social media, telecommunications, internet search and e-commerce, focus on big techs and ensure a level playing field between big techs and banks. Compatible policy, to target both fintech firms and traditional banks proportionately.